Hey guys, it's Sasha and welcome to the special Black Friday sale event in the stock market. After the shops were closed for Thanksgiving yesterday in the US, the sales are on, and this year we have some great deals available out there. Just be very careful because along with the great deals available in the stock market, we also have a bunch of overpriced tat being sold in the exact same sale. So make sure you do your homework and you don't go buying things that you don't need. Now, I made a video earlier today about the reasons for today's special fire sale. So if you want to know why this is all happening on Black Friday and what is going on in the world to cause this, make sure you go and check that video out after watching this one. But while you're here, let's talk about buying stocks on sale, because a lot of stocks are on sale today and there are some really important lessons that days like this can teach us. Because today is a prime example of the market doing a wobble and overcorrecting potentially to news that have so far got very little substance and very little factual data or expected outcomes behind them. As per usual, people go and panic and overreact, and as a result we get price swings that you don't see in the normal course of the stock market doing its thing on normal days. And when the world panics like it is today, there are three things that I like to do. The first thing is to go and make yourself a nice cup of tea or coffee or whatever it is that you like sipping and watch traders pull their hair out and smash the sell button on their trading screens. This is probably the most important step, and it is the only one that is compulsory in this list, because the one thing you have to do in this sort of situation is stay calm. We've got a sale happening out there and you might want to go and run out and pull your credit card out and spend. But we, unfortunately, at the moment, don't really know anything yet. Will the markets plunge further when they open compared to what's happening in the pre-market? Are we going to see the markets dip even further than today? Maybe further every day for some period of time? Or are we going to go and see a massive bounce back on Monday and forget that this Black Friday ever happened? Will Cyber Monday offer even better discounts than Black Friday that we have already? Maybe we're going to have a lot more negative news on the same topics coming out over the weekend. Well, nobody actually knows. And that is exactly why you need that warm, comforting drink in your hand. This is not a time for running around waving your hands above your head or worrying about your portfolio losing 5% in a day. The second step in this sort of a fire sale is to go and look at what is actually on sale and what isn't. I got an email earlier today from Sony with their Black Friday deals, and I am a guy who uses Sony cameras for my YouTube channel. You're watching this being recorded on a Sony camera, so I thought I'd go and click it to have a look at what they've got. And their Black Friday deal on cameras that, are worth thousands is up to £100 on some cameras. And if you click through from that, you find out that actually you get a sale which gives you about £100 discount on the Sony a7 III, which is about £1,500 after this discount. So you get about 6% as a discount on a camera that is already several years old and has already been replaced with a new model. And that's because Sony don't need to go and offer discounts. Their cameras are incredibly popular because they are really, really good. I would say many others would probably agree that they are currently the best thing you can get on the market, but you have to go and look at the stock market in the same way. Not everything that is being marketed as a sale or that might look as a sale is actually a sale. The travel industry, for example, at the moment is getting hit very hard. Norwegian cruise lines are on sale for 10% off today as I'm recording this video. Carnival is also down 10%, as are many others. Delta and United Airlines are both down 8%. The whole industry is down by a lot. But are these stocks a good buy? Because I'm sure some people on CNBC are going to be telling you exactly that today. Well, the truth is, we don't actually know. We have no idea. If the situation does worsen as it could, and if that means the travel market is depressed for another 12 months, that is going to cause these companies a lot of grief. They're going to be way behind in their financials, some of them going to really struggle to survive. And if this latest news is an indicator of what the situation is going to be, of the situation not going away anytime soon, that could mean that these travel companies are in it for much longer than 12 months. And how long can these cruise companies sit there with their ships docked, not earning any money? Of course, this could all be noise that we completely forget even happened by Christmas. But the risks in the sector are definitely there. The same sort of argument could be held for oil companies as well, although I suspect that the lockdowns in the future are probably not going to be quite as harsh and have as much impact in that way as the first ones that we saw last year. But then we look between the lines and we see that among all of this, some of the growth stocks are also down along with, the rest of the market. 4 out of my big 5 positions are down at the moment, all around 2%. That's Tesla, Palantir, AMD, and Pinterest. I'm not actually even sure why Pinterest is down on this news, because Pinterest did exceptionally well out of what happened last year. But my other one, Fiverr, is up because it is another one of those stocks that analysts think will do particularly well if people are forced to stay at home, a bit like Zoom. So the big question is, should you go shopping, seeing as it is Black Friday on the stock market? Or should you wait until Cyber Monday when there might be even better deals? Or should you wait until the January sales? Will the stocks be even cheaper then? And by the way, if you are planning to go stock shopping for US stocks and you live in the UK, Australia, or New Zealand, you can use my link in the description to sign up for Stake and get a free share worth up to $150 if you make a deposit of £50 or more. Stake don't charge any transaction fees, which makes them cheaper than the big platforms that all charge foreign exchange fees every single time you buy or sell. They do charge foreign exchange fees on deposits and withdrawals, but that is a one-off fee rather than every single time you go and buy stocks that happen to be on sale. And I will also get a small commission for referring you the way if you want to go and try Stake out and get a free share in the process. So feel free to use that link in the description, and thank you so much if you choose to do that. All right, back on the topic. When should you buy? Well, everyone will have their own way of thinking about it. Mine is pretty basic and maybe in some ways not anywhere near as sophisticated as some other people's theses. I just keep buying as and when I have cash, and I invest in companies where I see a particularly high and relatively robust upside. So today I might go and put some money in, and I might go and buy some of these tech stocks because they happen to be, on sale. Tesla has an absolutely huge month ahead, with a ridiculous number of big catalysts. New factories opening, crazy Q4 numbers coming in, batteries, the semi, blah, blah, blah. I've already talked about that. Do I think Tesla stock is undervalued right now? Yes, I do. Will it fall further? I have no idea. It might fall quite a lot more. Maybe we'll see a sustained drop like we saw early this year. Maybe we're going to see the stock lose another 20 or 30%. I don't know. Maybe Elon is going to go and sell more shares today and over the next few days, and that will cause the share price to drop even further. But I don't really care, because I'm here to collect the potential upside when I make an investing decision compared to today's price. And today just happens to be a sale. Remember that analogy that I used before? If I go into a shop and I see my favorite chocolate bar on sale for 50% off, do I go and buy it and feel happy that I got 50% off? Or do I wait until Monday, because on Monday it might be 60% off? Will I be annoyed if I buy it today at 50% off, but then see it on Monday being off 60%? The answer is no. A discount to me is a discount. And my view on this sort of thing is, as a long-term investor, is don't look a gifted horse in the mouth. If you have already done your homework and you felt the stock was a great buy just 2 days ago at a higher price, why does a cheaper price today suddenly not sound as good? Have the fundamentals changed? If the answer is no, well, you're just getting extra return for free. And yes, this sort of approach does not try to find the very bottom of the market. Just like I never tried to hold out for the very top either. And that's because investing is a game of averages in the long term. And as the old saying goes, time in the market always beats timing the market over the years. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.